Okay, so as always, we will start with the top-down analysis, a few of my favorite setups from the day. And you guys can ask and are encouraged to ask any questions, or if you see anything that I missed or that you saw during the day today while you guys were watching price, feel free to ask in the chat. And then after I finish the review, we'll go through questions and I'll do the charting for tomorrow. All right, so let's get into it. So beautiful silver bullet today. This is the 1 minute on NASDAQ. So we had a good SMT here. So SMT, you guys probably know what it is, but if not, it is just when one of the indices fail to make a higher high while the other does. So here, and we'll see shortly, ES was able to make a higher high here before displacing lower. NASDAQ failed to make a higher high. So the framework, the basics of SMT as a tool is that ICT says it's the market tipping its hand to you, right? There's a cracking correlation and something is changing and the price is going to reverse, okay? It's not every time, and it's obviously contextual, trade to trade, setup to setup, but that's how you use it as confluence for your trades. On top of this, you can see these light dashed, or dotted, I should say, lines here and here. We have the daily volume imbalance low and the daily volume imbalance high, okay? So right off the bat, this is the opening range. This is the Judas swing, right? Where does price come up to? The daily volume imbalance. What does it do specifically here? These are two algorithmic signatures of the market tipping its hand to you. So just like I just mentioned, the SMT, but the failure for ES to get to the volume imbalance high, right? After we fail to get to the high and we have the SMT, once we displace lower, it's reasonable to expect a short to go attack some sell side and at least equilibrium of the range. And I had a winning trade. It was the only trade I took today. It was a short long, and or not, I shouldn't use the word short before that. It was a short-lived long. It was a win, but it was a good example of why you can take partials at equilibrium if you don't think or aren't sure or confident that you'll get the whole move. And we will review that once we get there. But that being said, we had a good silver bullet here. Okay, so this would have been, you could enter here. It would have been a little more risky, right? But once you see this displacement, I'm waiting for my model, right? And my favorite model, as you guys probably know by now, is this setup, right? We're displacing lower and we're returning to what? Equilibrium from this high of this price leg to this low of this price leg. So on route up here, I would have liked to see an inversion get created. It did not. It doesn't require an inversion to get created. The most important thing is that, right, we have our displacement lower and then the return to the premium. Once you return to the premium, that's when you're monitoring how far into premium are we going. Is this just coming up to premium to go lower, or is this going to go up and return going higher, right? So once we return to this premium of this price leg and we see the displacement lower, we can enter on this short, right? The inversion is something I use as it's just one PD array as a final confirmation that price will go lower. We don't have a clear inversion here, but we do have this, it's not noted, but this little volume imbalance, okay? Again, we have this order block. These two things, these discount or bullish PD arrays, whatever you want to call them, these are also, I'm internalizing these the same way, right? Once these start to fail, it's confirmation that the algorithm is not respecting the discount PD arrays and we're going to reach for sell side. Does that make sense? So the inversion is a good tool where you can have retracements up into it, and then we can have the failure of the CE being reached or the bodies respecting the inversion as a whole. Things of that nature that I speak about frequently. But the main thing is that we have the displacement with the SMT out of this higher time frame PD array, which was the daily volume imbalance. And after this return to this premium, we displace lower again. okay? You can get short there. You can put your stop above here. Now, this is the same logic with the inversion model, and why I like the inversion model, because it reduces the risks. So instead of just, let's say there was I wish I had like some drawing tool here on Discord. There's probably some bot I can install, and I'll look into that. I'm sure our boy Panda, who isn't here at the moment, knows how to do that. I'll ask him. But let's say, for example's sake, right above premium right here, there was a big SIBI, right? So let's say this SIBI wasn't tapped into, but it was big. It was from the low of this candle, right? Let's say it was all the way down to right about equilibrium. Again, it's the same logic as my inversion model. Instead of just getting short at the large SIBI, and you'd have to put your stop above this high or this high, you wait for that reaction out of premium or out of the inefficiency, and then you can reduce risk to put it above this high, right? Since we already returned to a premium here and then displaced lower, we shouldn't need to go back deeper into a premium if my bearish bias is correct. Thank you, Sully, for that. Okay, so it's the same logic as the inversion, waiting for price to get to a premium and then entering on a PD array lower, right? Does that make sense, guys? This retracement into a premium just from this low price leg. And I mentioned today in chat, I believe it was just in the intraday commentary, but I wanted to see how we acted if we just retraced down to equilibrium of this price leg of the opening range, right? I wanted to see if we had any signs of going long, and I'll explain why. Okay, so this is the same action on ES, right? We have this silver bullet here, this bearish breaker, and the SMT. You can see how ES made the higher high when NASDAQ did not. So that's the SMT. Now, excuse me. The reason I wanted to monitor discount to premium was because ES failed to get to this daily SIBI. So it's very rarely, if on a higher time frame bias, if we were to continue lower, say today we just completely dumped, right? It's very rare that we come just this close to that higher time frame PD array, in this case the daily fair value gap, and then go lower without tapping into it, right? So right away, even if you miss this move, it's something you want to monitor, right? Now we have the opening range high, which I believe turned into just the AM session high. I believe we got this in the PM session, which we'll review. But right away, now you have what? This liquidity pool, this buy side liquidity pool becomes higher probability. Why? Because you have the higher time frame inefficiency that has yet to be delivered to resting right above it. Okay? So before I move on, actually, so I don't, when I say I'm waiting for discount premium this price leg to see if we react and we want to go get that daily SIBI, I'm not just like, we have this baby fair value gap here in the 1 minute, we have this volume imbalance here, okay? I'm not just entering once we get to those levels. So say this was something I was watching, this volume imbalance, price comes into it. I'm not just putting a limit order there because one, there's no clear place to put your stop loss. But two, I feel like I'm just treating it like a demand zone in the traditional sense, right? That there's just quote unquote orders resting there, right? I'd much rather wait to see a reaction in discount. So say we came down here and then we got my inversion model. So a sell side, say we close back above this, right? I probably would have taken this long, right? But since nothing happened and we just aggressively went lower to sell side liquidity, there's no harm done. Instead of just blindly longing at this fair value gap or this volume imbalance or whatever PD array forms in here. Does that make sense? And that's the main reason why I like that inversion model. Because you're not just setting a limit order down here, you're waiting to see the algorithm at work, okay? But the main thing, now we move on to the PM session. A couple things that work here that we will cover in the next few slides. We'll start here with the ES setup. So again, this was higher probability, this high, because we have the inefficiency on the daily time frame that has yet to be delivered to, right? So even if we're going to continue lower on a higher time frame basis, this week, the rest of the week, whatever, this should be delivered to, okay? So it makes sense to monitor longs, okay? Where can we monitor longs? The 4-hour fair value gap, and we do not have it, or I do not have it on this PDF. Once we get to the charts to look at more of a forward-looking perspective, we can look at this. But we have the 4-hour fair value gap. Now, what is this? It looks like I'm using the middle line, which is a new feature on TradingView. This brown box is the 4-hour BISI. It looks like we fell just short of it, but once you go to the charts, I'll show you. This is exactly the CE of the 4-hour fair value gap, right? So that's exactly what you want to see, okay? Once this happens, again, we have this sell side liquidity purge right here. So we sweep sell side into a higher time frame PD array, and then we displace higher. What are we doing when we displace higher? This SIBI fails, okay? This one holds so far, but this one fails, okay? So I constitute that as a market structure shift, right? If I had to put a term on it, I would constitute it as a market structure shift, because if you wanted to have the clear swing high broken, it's all the way up here. So that's from the low, let's call it 4156, and I'm just looking at the values over here on the right. Let's call it 4156 to the high here. Let's call it 417, right? That's 14 points you're possibly giving up. And then also, once price gets up here, you have to make the decision of, damn, we've already gotten all the way up here. Where do I put my stop loss? What if it wants to dig back down into a, deeper discount? Okay, so that's why the inversions, or any premium PD array in this case, if you see them fail after displacement from a higher time frame PD array, it's a sign that we could be reversing, right? So, like I said, we have this CE displacement, and you can go long right here. Again, I was not around for the PM session. I had a busy day. I won't be around probably during the PM session too much this week, but I'll try to be at the charts as much as I can, just have some stuff going on. But this right here, as soon as we close above this, I would go long. Now you can see you would have to take some drawdown here, but your stop loss would have to be below this low, right? Again, you can also see we're coming back into this blue box, which is just a smaller BISI at the top of this 4-hour inefficiency. But if our bias is correct, our bearish bias that we have to go complete this higher time frame objective with the AM session high resting right below it, right? This shouldn't be hit because we've already had the algorithmic signature and the displacement and a failure of a premium PD array. Does that make sense, guys? You guys following along, or am I speaking gibberish? Just the logic of it. And again, I wish there was just some rule I could say, and you probably heard ICT say this too. If there was a golden rule or a golden statement he could make to just say, okay, see this, get in. It's not like that. It's internalizing this order flow, trying to understand the algorithm, understand price, understand what's failing, what's supporting price, right? And again, that's why you have these higher time frame PD arrays on your execution chart. Or if you don't like to have them on your execution chart, you've probably heard ICT say too, you can just write them down, okay? Or just have tabs open like you guys see me do and switch back and forth from them. But I like to see how these 1-minute candles respect them or disrespect them as well. Okay. In terms of actual trade, so your entry could have been here, right here. You would have had a little drawdown, like I said, but your stop would have been safe. But your first partial could have been above the lunch high, right? And then terminus could have been AM session high and or just a couple ticks above the daily SIBI low. So the main takeaway from this is what? The fact that this was a higher probability liquidity pool. And again, even if say that this was a 1-hour chart or a 15-minute chart, with the logic from One Setup for Life, AM session is obviously a session, and that's what ICT teaches in that video. So it's already a higher probability liquidity pool, and it's right below this higher time frame inefficiency, okay? A couple other things on this setup. The inversion was a lot more cleaner on NASDAQ, okay? We have this sell side liquidity purge, and it would have been nice to see them purge this one more time since we came back down. But once we close above this inversion and the logic that we just discussed on ES, we should expect this to support price to allow ES to go back up here and complete its higher time frame objective. And we should just expect that this is just going to be left as engineered sell side liquidity. On top of this, look on the right. Where is NASDAQ, right? It's in its new week opening gap. And this should say new week opening gap high. It's my fault. But new week opening gap high and failure to do what? Get to the new week opening gap CE, right? We displace away from it, okay? And this large inefficiency, this SIBI, fails to act as resistance for price, okay? And now you have what? The inversion, this fair value gap, this small white box, and then this fair value gap, and this order block here, all as defense, right? So you should feel safe that this stop loss should not get hit, right? Because ICT always says if you have 3 PD arrays, right, and they fail, you're offsides. But once this happens and you have a higher time frame draw, this is when I'm looking to get involved, okay? So main thing, NASDAQ as ES had its algorithmic signature here away from the 4-hour CE. NASDAQ had its respective algorithmic signature away, failing to get to the new week opening gap CE. Does that make sense? And again, we can see if you were trading lunch high, or excuse me, NASDAQ, you would target lunch high as a partial, or you could take full pull off there. But then we go back to NASDAQ's daily SIBI low, okay? And now the framework for all of this is dollar, okay? So I mentioned last night in our live some of the things I want to see for dollar. I believe I posted a chart of it as well. I could be mistaken. Let's see if I did in the dollar tab. Yeah, so I'm going to send this so you guys can look at what I was watching last night. So I'm just copying this and I'll send it in the stream chat. So when I was charting last night when we were on the call, this is what I was watching, okay? That 1 hour order block. If we displaced above that, right, it would become what? A breaker, a bullish breaker, low, high, lower, low. The highest up close candle is a bullish breaker and it should support price and continue us higher. This is all overnight, right? So we get back up into this and you can see also, right, this is beautiful rejection. This is to the tick and we can look at that once we get to the charts, the live charts. This is to the tick of this high of this SIBI. So that's an algorithmic signature in and of itself. But we rejected just short of the mean threshold in this order block, displaced lower, right? And then what? IOFED, institutional order flow entry drill. So it's just a little tick up into a inefficiency before we continue lower, okay? So dollar's reaching for sell side and it's not respecting what? Discount PD rates. It's not respecting this order block. It's not respecting this fair value gap. And it's not respecting this brown, right? This BISI. Once you close below it, what do? Come back up into it. Does it get to the CE? No, it can't even get to what it looks like, 25% of the inversion. So it's extremely weak, right? Where does it reach for? Sell side liquidity, okay? So these are the times where I will use dollar, when it's clear, right? And this is why I preferred longs, especially when ES left that AM session high right below the daily SIBI. So does that make sense, guys? How you could have an if-then statement. If dollar closes above this, I'll prefer shorts in indices because I would expect this to support price for dollar to push it higher. If this bearish order block acts as resistance for price on dollar, I'll expect lower prices in dollar and higher prices on indices. Does that make sense? So it's easy to overanalyze and try to watch NASDAQ, ES, dollar, especially on dollar if you're on like the 15 or 5 minute. I tried to do that when I was just starting, and it was pointless, in my opinion. So for dollar, I just wait for clear setups like this. So this clear order block, and I just wanted to see how we're going to use it. Okay. And then the following action are just further confirmation. All right. So that is it for the daily review. If you guys have any questions, again, type them out in chat. But some good price action again today.